Welcome to the end of day review for Wednesday, the 27th of December 2023. As per usual, starting off with the economic calendar, what we can see is that for today there was no high impact news events, not any that were red folder, which means we were pretty much free to trade both sessions. For today in particular, there were no bank holidays, so pretty much business as usual. However, we do know to expect low volumes during the holiday period, which is typically this last week of December and probably the first week of January until things slowly return to normal. Jumping into the charts, I haven't done fresh EOD markups just because things aren't changing very rapidly, so I thought it would make sense to just continue with these charts. In terms of market structure, we remained bullish. Bullish market structure. As you can see today, we actually have taken out the swing ERL point, which is pretty good news. And if you recall from yesterday, where we essentially said that the trade that we did take, you could potentially hold it to target the external range liquidity, just because it was a Tuesday and it was likely the low of the week if we were going to have a bullish week. And from based on that promise, that pretty much played out today. As you can see, I do have yesterday's markups on, but what we will do on the 15 minutes is just focus on what we could trade for today, which to be honest wasn't much. So what we can see is that we have built this 4H primary leg from this change of character that essentially validated this primary leg. We then reset the 4H primary leg because it actually wicked below that point, but most importantly it didn't actually body break, which is why this 4H primary leg remained valid. In terms of shorting, as you recall, there wasn't any 4H OBs that failed in the protrend leg, which could then validate the pullback phase to then enable shorts. Since that didn't happen, we can only long, and that's an important thing to remember, because what you can recall from yesterday is that we anchored our fib to the previous high and low of the day, which was Friday, and then we looked for liquidity in the leg and essentially entered upon the liquidity in the leg being taken. Perhaps just something I didn't highlight for yesterday's EOD. In terms of being break even, this would be your break even point, because that's the extreme of the primary leg, and for price to continue, we'd have to at least wick this level to actually break even. And the reason why that makes sense is because we only have one direction to trade in. So if we are going to take longs, it's certainly going to be from this point. If we come deeper down, we're unlikely to take any trades, and like I said, you probably need a reset or an extension. Then moving on today, what we can see now is that yesterday's high and low of the day, being the previous high and low of the day, is now within the day before. So it's within Friday's previous high and low of the day. This is an issue because we cannot validate a secondary leg. If we were to anchor our fib to these levels right here, we essentially saying that there's a new secondary leg and we're overriding this primary leg, and that doesn't make sense because there isn't really reason to short. So why are you validating a secondary leg when the primary leg is still intact? As a result of this, your options for taking an entry was to wait for this extension point right here. So I'll mark it out, primary leg extension point. And as you can see, when we broke up, we could then anchor our fib above the extension point. As you can see, we got these body breaks, but price at no point actually came down. Looking at it during the London session, early London session, these significant sell-off was quite concerning, as it's somewhat a bit scary to see it come down with that much momentum, but as you can see, it turned around and went straight back up. In terms of your options for trading today, there were none. Like I said, In terms of when the extension leg actually came into play, price never came back enough. And then in terms of taking a trade based on a new London low of the day, that wasn't a possibility just because of the fact that we can't validate a secondary leg inside of a primary leg. Your options for, like I said, for yesterday, you're either going to full TP 1 to 3 given the scenario we are in, or you're going to hold to full TP and you're probably going to partial 1 to 3 around here, take 50% off, so that's 1.5, and then you'll full TP at around 8.5, maybe even 9. Honestly, I wouldn't be greedy, I'll take the 8.5. That divided by 2 is 4.25 plus your 1.5. That's almost a 6-hour trade, which is really good. But yeah, overall, this was today was a bit of an uneventful day. But yeah, you could have, if you held on to this, you'd be an extra 6 hour up for December. However, I don't think it's worth the risk trading in these times, and it's probably much better to just rest your mind and recover, recoup, do your quarterly reviews and whatnot, and be ready for January. What I do want to quickly mark up is just where the high and low of the week is, and currently this is probably the low of the week. Low of week. Yeah, and my guess is this is probably going to be a nice bullish week. But yeah, overall, pretty good past 2 days, and we'll chat again for tomorrow's end of day review.